there's two recent events that happened. One is yesterday, a bill was introduced in Congress that was basically saying that we can't sell oil to China from the SPR, right? Because there was a whole uproar a little bit ago that a little bit of oil made its way to China.
Sure.
That's more of a political grandstanding. But what was more important and was less talked about was that the Biden administration was looking to not sell or to cancel all planned sales in 2023 of the SPR, and they would look to start refilling it. So that leads us to the question of what's going to happen when it's 80, 90. Let's get to next summer, and let's say we're at $95, $100 per barrel, and our SPR has yet to be refilled. We're putting ourselves in a very precarious situation.
Okay, cool. Everybody, welcome to the Angel Research Podcast. We are here as usual today to discuss the market's hottest stock stories and investment opportunities. We have Keith Kohl with us today. Keith is the founder and the managing editor of a couple of investment advisory services, including Energy Investor, Technology and Opportunity, and Topline Trader. Keith, do you want to give us a rundown of each of those?
Just very briefly, sure. The first two are exactly what they sound like. What we do is we look for long-term investments in the energy and tech sectors. And I can get into a Topline Trader a little bit more. This is more of our high-end trading service that mostly focuses biotech, small biotech stocks that I can get into in a second.
Oh, okay. Yeah, sure. I mean, you did recently have a couple of really big winners on Topline Trader.
Well,
were those both at the beginning of the year?
So we kind of hit two home runs right off the bat. In the first week, we had two of our biotech positions get bought out, and both of them nearly doubled overnight. So, I mean, you can't start off a trading year any better than that, especially when you're given the bloodshed that took place last year.
Yeah.
But that's it's an interesting point that I wanted to make is even though most investors typically that are probably watching this have felt pain at some point last year, it was just a brutal, bloody market.
It really was.
So in our Topline Trader service, we actually made a trade about one every 2 weeks throughout the entire year. So we made 22 trades and closed 19 of those out for winners right off the bat. Some holding within a few days, some holding within a few weeks. And so,
how are you identifying those?
So what's interesting though, real quick, is that the three stocks that we're still holding on from 2022 are on the verge of going green, and actually have a lot of momentum behind them right now. So what's interesting is that retrospectively, like looking back, we may actually turn out with 100% win rate.
That would be pretty insane,
right? And
so please, how do you find these stocks?
Seriously, so we focus on large catalyst events from the FDA. So think like new drug applications that are set to be approved, or top-line results from a trial or a specific key study or something like that. And we comb through those and pretty much pick the cream of the crop. And
how do you know what's the cream of the crop?
You have a certain amount of factors that you take into account. What I like knowing is that there's a high chance of success, that what this event is going to be is a strong catalyst forward.
Yeah.
So
you want drugs that work.
Right.
Yeah.
Right. So once you identify the small opportunities that have a high chance of reward, it's almost like taking candy from a baby, it feels like.
Well, it looks like it based on that performance. I'm wondering if we could maybe post-production show some of those trades
sure.
on the screen. I don't know if you want to reveal them or not, because you've already closed out, right?
Sure. You can do whatever you want.
Okay, cool. I want to talk about energy, which is kind of like that's your.
So,
do you still want to talk about biotech?
Let me give you a little. Tell you what. Let me put a little perspective on this.
Yeah.
We've been closing out these double-digit gains, triple-digit gains in Topline Trader throughout 2022 regularly. Now, if you want to take like a little comparison for your average investor, I think is it iShares has a biotech
I was
ETF,
going to ask you
IBB.
how was the kind of broader
The
biomech?
1 year performance from that was 6%.
Yeah,
So it's a matter of obliterating that performance. At some point, it's just an edge that we have, not having to worry about only investing in mega, pharma,
so you're
big
you're
pharma or mega
specifically
cap stocks. I'm specifically looking for um, companies that have the right catalyst at the right time at the right place. So basically, you want to try to buy the fundamentals and trade the technicals type deal.
okay. Generally, how big are these companies? Is there like a max?
We don't usually have a limit, obviously, but anything from micro to mid,
Okay,
I'd be. They generally have like between 1 and 3 billion of a market cap. So it's not like trading Moderna or something like that.
sure, yeah, yeah.
Right.
Okay, oil, energy. This is
Sure.
definitely like this is your bread and butter. This is where you started in this industry. You have more knowledge, about the sector than I think pretty much anyone that I'm aware of. So, kind of wanted just to ask you about the big energy player, which is oil. That
Well,
the classic energy
I'll tell you
player.
what. I'll give you.
2023.
I'll
How's
give
this gonna do?
you. Let's just talk about the major events that are going to happen in 2023 that will shape prices.
Okay,
Okay.
great.
It shouldn't be a surprise that I'm extremely bullish in 2023. We made a killing in 2022, identifying the drillers and the mid and downstream assets that were just they were just sold off too much.
What were some of the big
Um,
ones from last year?
I don't have. You'd have to comb through the winning
Okay,
list. Yeah,
yeah,
I don't have that offhand.
sure.
Um, so yeah, so let's get into some major events here. The first and the closest one is going to happen next week, and so that's when the EU is going to place its next round of sanctions on Russia. Um, the current sanctions are basically like targeting individuals, targeting like economic points.
For specific companies.
Yeah, and so the big thing is that they banned seaborne imports into Europe, and then this is on top of the G7 setting a price cap on Russian oil, which is kind of a joke because you effectively put a bottom of $60 per barrel on Russian oil, which is good for Putin, right? And so next week, what's going to happen is actually a more interesting phase because they're going to ban Russian exports on, or they're going to ban Russian imports to Europe on petroleum, or on oil, stuff like diesel, distillates, stuff like that. And so, um,
Is that like a substantial chunk of the market? Like, is that going to really
so,
cut them
so
off?
here's the interesting part. You're not exactly so. Let me put it this way. These sanctions, right, while they are not ineffective, I think they're more toothless. And let me explain that. So, like, what we're essentially doing is driving global oil flows to different parts of the world. Russia, throughout these sanctions up until now, hasn't lost a step in its oil exports. It's
Not
just simply selling it to other people.
in terms of amount, but are they? I mean, like,
So,
are they selling it at a reduced
well,
price than they normally would be? Like, do
there
they have to
it's
sell it for
you're going to
cheaper?
buy it at a discount
Yeah,
to obviously to stuff like WTI or
gotcha.
something
But
like
the
that
amount of oil that they're putting out is the same.
is
You're
the
saying.
same.
Okay.
It's just and it's going to two very very important places, China and India.
Okay.
Give you an example, like 2021, India accounted for 70% of Euro oil, which is just Russian exports. So that's like a 33-fold increase year over year.
And are they using it or are they
Oh, they're
reselling it?
using it. India is growing just as fast as China.
Yeah.
So that's where global demand growth is going to take place in 2023, and that kind of segues into the next major event, right? Which is China reopening. Okay,
Mm.
we've talked about this actually on this podcast before, but this is probably the single most bullish event, depending on what happens. So China has already lifted its restrictions. It's already raised its import quotas. It's and so we're not seeing any demand destruction, right? Um, In fact, China's consumption for crude is actually expected to grow by about 800,000 barrels per day in 2023. And so that growth alone is going to make supplies extremely tight, right? Um, the IEA, I think, just projected that global consumption is going to reach a new record of about 101.7 million barrels per day.
Yep.
So yeah, it's gonna lead to an extremely tight market.
So where do you see opportunity for investors there?
Um,
With
well,
the
hold on a
oil
second.
market being that tight?
Let's just back up just for a second. Let's not get to the opportunities just yet. Um, so if China is mostly the bullish aspects of the market right now, there's one catch. You have to look at the other side of the aisle. So let's look at supply now, because we already know demand's going to be record off the charts. In fact, the demand in the U.S., in my opinion, is being underreported by the EIA, and it's actually a lot stronger than we expect.
Why is that?
Um, the biggest example that I saw was in August, and it's not technically the EIA's fault. It's just the way that they were either calculating or reporting it. So in August, they said that our oil demand was the same as it was in August of 2020 when the entire world was shut down
Sure.
and we were at extremely low point of demand. And so we found out months later. I mean, EIA reports seem to be made to be revised. So they come in later and say, "Oh yeah, back in August it wasn't technically this. It was actually about 1.5 million barrels higher than what we thought." So there's room for revision with them.
Okay.
And so
And they've been revising upward?
they've been revising upward. Over the summer is just the example I have.
Yep.
But I have a feeling that it's more underreported than not. Usually, like we'll get two major weekly oil reports. You'll get the API report and you'll get the EIA report, and there are usually discrepancies between the two. But over the last couple months, like the media has been extremely noisy about Biden being able to buy back oil into the SPR, because I think oil dipped to about $70 in December, pretty briefly, and suddenly there was this uproar that Biden was doing the right thing. And if in case anybody's wondering, he released 180 million barrels from the SPR, and the state that that's in right now sets us up for an even tighter 2023. So last year, right? Biden was able to release a record amount of oil.
So are the
from
reserves
SPR.
low now?
So the inventories right now in the SPR are about half of where they were.
Okay.
Right. And he's already made a statement,
Mhm.
or late last year, like, we're going to buy back between $67 and $72. So when oil dropped to like $70, all the political talking heads come out and start claiming victory or claiming,
Yeah.
the opposite. So all of it is bullshit.
I don't know if you have this like the specific number on the top of your head, but like how much oil is in that reserve? Like,
So I want to say there was around 797 million barrels. I could be wrong. It was
Yeah.
around 800 million barrels in the SPR before this happened.
Okay.
So now we're at about half. We're
Okay.
at about a little bit under 400 million barrels right now.
Gotcha.
And not only do we have to refill it now, but even when oil dipped down to 70 and Biden made a big announcement that he was buying back millions of barrels, which is what kickstarted the frenzy, he couldn't find anybody to sell him the oil for that much.
Mm.
So it never went through. And now he's right back where he started.
Gotcha.
But I don't want to shit on Biden too much. The problem is he just doesn't have that tool in his belt for 2023. He's not going to be able to release oil of that magnitude. And in fact, I'm pretty sure there's two recent events that happened. One is yesterday, a bill was introduced in Congress that was basically saying that we can't sell oil to China from the SPR, right? Because there was a whole uproar a little bit ago that a little bit of oil made its way to China.
Sure.
That's more of a political grandstanding. But what was more important and was less talked about was that the Biden administration was looking to not sell or to cancel all planned sales in 2023 of the SPR, and they would look to start refilling it. So that leads us to the question of what's going to happen when it's 80, 90. Let's get to next summer, and let's say we're at $95, $100 per barrel, and our SPR has yet to be refilled. Like we're putting ourselves in a very precarious situation on the supply side, because U.S. domestic production is not ramping up the way it thought, right? The way you thought, and so we don't really have any weapons left in our arsenal to use.
Gotcha.
It makes so we'll get to the opportunities, because drilling is one of them. By the way,
So then you think it's just pretty much inevitable then that oil is going to get more expensive in
I
2023?
think 2023. Like this
yeah,
is the bullish thesis. Like
it's a
I think
convincing
it's
argument.
yeah, and so right, yeah.
Okay,
Yeah.
did you want to talk about opportunities there, or do you want to maybe just punt that and say that, like,
So let's punt that, and let's save all the opportunities for the end.
That's where your subscribers will go for the information, right? Like energy investor.
Oh yeah.
Yeah,
Absolutely.
I'm not trying to reveal all your picks here.
No, you're fine.
So how does all that the whole story about oil, how does that tie into diesel? I remember there was kind of this a couple of months ago we got this these scary headlines that we were almost going to run out of diesel. We obviously haven't run out of diesel, but I also saw something recently that the whatever's going on with the EU, them cutting that stuff off is also going to potentially put some strain there. So maybe talk to us a little bit.
Right. So obviously limiting your sales or your imports of diesel from Russia is going to cause a problem when your demand for diesel grows. And that's the underlying issue on why there is a bullish case in the diesel market, because we're not seeing demand soften at all.
Yeah.
And so we're going to see another very tight market for at least the first, I would say the first 3 quarters. I can foresee supply starting to catch up as demand softens next winter.
Okay.
But the situation,
so demand gets higher heading into the summer for diesel. Is that the case?
Sure.
Yeah.
Yeah. And there's a little fun little shoot yourself in the foot story in Europe, because over the last 10, 15 years, they've made a huge transition in their diesel in the diesel fleet of their cars. So remember Dieselgate from Volkswagen and all that, because they were faking diesel emissions. That was the reason why Volkswagen was pushing to diesel, was because between 2005 2015 there was a big surge in the diesel fleet in Europe, and that's passenger vehicles and all that. And so now you're seeing it's kind of interesting how you're seeing issues, which I'm sure we're going to get to later, revolving transitioning to diesel cars or transitioning to
So
EVs.
is Europe more dependent on diesel than most other regions?
So Europe's going to be more vulnerable.
Okay.
That's for sure. Here in the US, demand is still high. Prices are still high. And yet, even after a couple builds in diesel inventories in December, we're still 20% below the 5-year average for stockpiles. And in fact, I believe 2 weeks ago, there was a completely surprise of about 2 million barrel drop in diesel or in distillates inventory, which the EIA reported, which kind of was an interesting little feature. So we can't I don't think we can expect the diesel supply to radically increase, especially considering we're having planned outages from scheduled maintenance, stuff like that for the refineries. So it's going to take them a while to catch up. But yeah, I think a diesel shortage is very much on the books.
So if I wanted to invest in diesel, I was bullish on diesel. Are there companies that are close to pure plays on that, like people that are distilling it or making it?
There's always pure plays in the energy sector. So obviously I don't want to give away our
sure. But what do these companies what do these companies do?
Right now we're pretty we're looking pretty good in refineries that are geared more toward the specific markets that we that are going to need.
Okay. So they're refiners. That makes sense.
Yeah. In a nutshell, you're looking at demand is just simply outpacing supply at this point.
Yeah.
And so the fundamentals, you should always invest in the fundamentals.
All right. So fossil fuels, no brainer in 2023 for you.
Sure.
What about the resource side of the energy equation? So strategic minerals.
So strategic minerals is going to have an interesting year. I think lithium's going to head higher, and I think that the recent hubbub over cobalt from that Joe Rogan interview is going to hopefully.
What's that for people who aren't familiar?
I'll get into it in a second.
Okay.
But like hopefully that'll spark more attention. So to get into this story, you have to go back to about 2016. Okay, that was like about the time of the first real lithium boom, lithium prices, and at the time, it turns out that our cobalt supply is coming from a pretty shitty place, right? The artisanal mining that the uproar was over artisanal mining in the Democratic Republic of the Congo,
Okay.
right, which is where most of the cobalt.
What is artisanal mining? Is that where like you have some?
That's where you just
some
that's
artists
where you,
some artists that are mining. What's going on there?
right. You're just
What makes it artisanal?
just means no machines. You're just digging with hand,
Okay.
and then
That's good PR.
well, yeah, right. And so back in 2015, that Apple and some of the other big tech companies that are just slaves to these strategic minerals or these strategic metals, they basically came out with these ethical cobalt statements. And so even though there's about 70 pounds of cobalt in every Tesla, everybody was insisting they're just going to get the ethical cobalt. It's not going to have anything to do with this slave labor or the child labor that's going on in the DRC. And so kind of everything went away because we like our iPhones. We like talking on podcasts and speaking into microphones and everything else that you need these metals for to operate.
Yeah, society wouldn't function without those things.
And so what happened recently in this interview was that somebody actually revealed that there is pretty much no such thing as ethical cobalt, and that these artisanal mining operations are actually far larger than anybody ever thought. And it's going to create an absolute PR nightmare.
Yeah, so I saw that video, and it was basically like a pit. Yeah. He had a video of a pit of
right
people.
Now, the world's distraction for crappy PR is focused on Russia and Putin and China and all that. And this is a story that's buried.
Do you think it's going to catch up to them?
I think it's not only going to catch up to them, but if you think about logically where we have to transition from fossil fuels, eventually, like fossil fuels by definition are non-renewable.
Yeah.
So eventually there's going to be a point when we're all driving electric vehicles.
Yeah.
And then as everybody's starting to learn, seems like are waking up to is the fact that that's not going to come without its own cost. And so the next major battle for these players that want to use lithium batteries, that want to use the cobalt in the lithium, all this, they're going to have to address this, and hopefully sooner rather than later.
Okay, so you just talked about potentially running out of fossil fuels. Eventually, you would run out of lithium and cobalt too, right? So like there is except for there is like a recycling aspect of it too, and I know that you have some a little bit about a company that does some recycling.
Right, and so I really enjoy this lithium recycling play that we're trading recently.
Yeah.
And what's interesting about this is that if you've noticed, especially since the fall when we started really kind of open trade war against China in semiconductors and technology and shit like that, I don't think people understand that China has the monopoly on lithium processing in the world. Like, its lithium production is essentially from, Australia and South America, right? And so this lithium triangle in South America is essentially responsible for like 2/3 of the world's lithium. And China is basically the monopoly of where that goes. Okay.
Gotcha.
And so they're controlling all the lithium processing. And so you're going to see people you're going to see whatever current administration will be in office and has China as an enemy, you're going to see them incentivize and push domestic projects.
Okay.
And this lithium recycling play that we do, they don't mine recycling. They actually take the batteries or they take all the lithium battery products all the millions and millions of iPhones that get thrown out every year.
Yeah.
And they basically recycle the lithium out of that.
Okay. That's pretty. I mean, I feel like, people talk about renewable energy, and it's like without that, you wouldn't really have renewable
Sure.
energy. So it makes sense. Okay. Last thing I had on here for today was to kind of talk about U.S. energy policy. I know that I feel like you already kind of touched on that, but was there any more commentary that you wanted to add on that?
Sure. Well, I think U.S. energy policy is let's see.
Don't censor yourself.
Yeah, I don't want to. Yeah, I don't want to say anything. I want to figure out how I want to say
Take
it.
your time.
I'll tell you what. We can save that for another podcast if you want.
You want to do that? You want to just do a pure
let's
pure energy policy?
I can go into energy policy for a while, but the problem is I don't want to ramble off for another hour.
Okay,
so.
And it's as far as future podcasts, also you and I are going to have to talk about artificial intelligence and all the stuff going on with.
We got a lot of stuff to talk about. Absolutely.
Okay, cool.
Mm-hmm.
Keith, anything else you want to plug before we go, or?
Not right now.
Okay, cool. Keith,
great.
good having you on the show, and we'll see you all next time.